ICT strategies do not work. In this video, I'm going to reveal the secret reason as to why most ICT traders are unprofitable and why their strategies don't work when they're trading in the real live markets. I passed a true Forex funds evaluation phase 1 and 2 using this exact system that I'm going to share with you, and it's my bread and butter setup. And this exact bread and butter strategy that I used to pass the true Forex funds challenge had a 63% win rate. So it's a very high probability system, and I'm going to break down absolutely everything you need to know in this video, so pay attention. And also, if you want to buy your own true Forex funds evaluation challenge, the link to that will be in the description below. And what I'm about to share with you is a major concept which a lot of ICT and smart money traders miss out when they're trading in the live markets. So let's get straight into the strategy. So now let's get into the bread and butter setup, which is one of the setups that I look for on a daily basis. So essentially, we're going to look for our true higher time frame liquidity sweep and lower time frame entry drill. Now, although this sounds so simple, so many people get it wrong and so many people are faked out because they can't spot the liquidity. And remember, if you can't spot the liquidity, you are the liquidity. Now let's get into the golden rules for the time frame alignment, and this is literally all you need to become a profitable trader. So we're going to be trading from the higher time frame setups to the lower time frame entry drills. Now, although this sounds simple, so many people mess up, and you hear a lot of people saying price is fractal, but they don't truly understand what this means. What happens on one time frame also repeats on another. Now, what do I mean by this? If we're looking for our liquidity sweep setup on the 4-hour time frame, we're going to be looking for our lower time frame entry drill on the 15-minute time frame. Now, the same applies because price is fractal. We're going to be waiting for that same liquidity sweep setup on the 1 hour, and we're going to use this as our higher time frame setup, and then we're going to look for our lower time frame entry drill on the 5-minute time frame. And now this is how you can choose your trading style based on your personality. And you might be wondering, okay, well, what pairs does this work best on? It works on every single market: Forex, stocks, indices, metals, whatever you want to trade, because price is booked the same way. And my personal favorite is the 15-minute as my higher time frame and the 1 minute as my lower time frame entry drill. Now, as you can see, price has made equal highs right here as liquidity, but we don't have to see equal highs specifically. We could just see one old high, but if it does have equal highs, that's an even bigger magnet for price to be attracted to sweep as liquidity and then reverse in the opposite direction. So what do we do after the 15-minute sweeps liquidity? Simply, we go down to the 1 minute time frame, we wait for either a second liquidity sweep and then a market structure shift in the opposite direction, or if that liquidity sweep doesn't happen, we just wait for that market structure shift with displacement. And now, even though we have two fair value gaps, I'm going to enter off the lower fair value gap because it's clear and obvious that price has broken structure with displacement and also made a clear and obvious fair value gap. So I'm going to enter at the low of the fair value gap and either place my stop loss above the high of the extreme fair value gap or above the high overall. And here's the key, guys. We want to be taking profits at a set risk to reward. We make money and make profits when we exit the trade correctly. So as you can see, if I have my set risk to reward at a 1-to-3 risk to reward ratio, that also aligns with the opposing liquidity. That is a very good take profit. That is a very good trade setup for me because I'm also targeting opposing liquidity, and I can also replicate the set risk to reward of a 1-to-3 risk to reward ratio over a series of trades, making me a consistent trader. And remember, our fair value gap entry must be during a session. Now, I personally like to trade the London kill zone because I do prefer Forex pairs. However, you can use it in any session. I would stick to London session and New York session to take these entries in. Our automated trading bot will pass your funded challenge for you 100% guaranteed, or you don't pay a single penny. Don't waste time gambling your funded challenge because there's a high chance that you will fail that funded challenge. But with us, it's a guaranteed pass and it's a zero risk investment. So if you fail the challenge for whatever reason, we have never ever failed a challenge before, but if we do for whatever reason, you get a full 100% money back guarantee, what you paid us for the service and what you paid for the challenge. So it's a complete zero risk investment. We've got amazing reviews and testimonials from our clients that we funded, so all the proof and reviews are right here on this group. There's a lot of people pretending to be us, so the link to this will be in the description below. And guys, it's a complete zero risk investment and it's a guaranteed funded account. Your aim should be to secure as much funding as possible, so get funded now and get funded fast. We smashed a 1-to-4 risk to reward in one trade, and the signals room is on offer for $30 a month right now. I share my analysis, chart work and my exact live trades to the pip, so go ahead and join for $30 a month right now before the price increases to $100 a month. Take advantage of the offer, guys. The value in here is absolutely crazy. And remember, guys, I've also got my completely free community and the link to this will be in the description below. So remember, guys, don't waste time, get funded now and get funded fast. It's a 100% guaranteed pass, so you cannot go wrong. And remember, the signals room is on offer for $30 a month right now, so take advantage of the offer before the price increases. So as you can see, we're on the London kill zone right now. It doesn't have to be specifically the kill zone, it could just be within the session in general, but I like to take my trades in the highest probability areas, which is the kill zone. So as you can see, for this example, we're on GBP USD and we're on the 50-minute time frame to show you my personal favorite setups. So we're going to be using our 15-minute time frame as a higher time frame to look for liquidity sweeps, and we're going to look for the 1-minute time frame to look for our lower time frame entry drills. Now, as you can see, we've got our high right here on the 15-minute time frame, and we've also got this low right here on the 15-minute time frame. Now, it doesn't have to be major equal highs or major equal lows. It could just be old highs and old lows like I mentioned before. So as you can see, we do have this old low, and below this old low, we do have a discount array, this order block right here. And if we just mark out the body of this order block right here, you can see we can use that as our discount array if price was to sweep this liquidity and tap into this order block area on our 15-minute time frame. So let's see what the next candle does. And as you can see, price perfectly taps into that order block area and sweeps that liquidity. So now that we have our higher time frame in check, let's go into the 1-minute time frame and look for that lower time frame entry drill. Now you might be wondering, where is our market structure in this scenario, because it's not the cleanest of examples. If you want to be safe and conservative, you could mark out this high right here, this fractal high on the left, and use this as our market structure shift area. And you can see we did have a mini liquidity sweep right here on the 1-minute time frame. But if you wanted to trade more aggressively, you could mark out this area right here and wait for this break of structure, market structure shift, change of character, whatever you want to call it. Just simplify it down, guys. It's basically all the same thing. Now let's wait for the next candle and see if a fair value gap forms. Now, as you can see, we do have a market structure shift with this area, and we do also have displacement with this break of structure right here, because we have this fair value gap perfectly lining up right here. And now in this scenario, this is the only fair value gap that we can take a trade off. So this is where I would place my entry, and I would also place my stop loss below the overall low just to be safe. And then all we're going to look for is our set risk to reward of a 1 to 3 at least. Now this doesn't mean we have to take profits at our 1 to 3 fully. No, we could take partials at that 1 to 3 risk to reward ratio, or we could manage the trade once price hits our main take profit area. Now let's see how price tags us in. As you can see, price almost instantly returns to that fair value gap area and then moves to the upside. But let's see what price does now. So as you can see, price taps into our area right here. And now let's just go up to the 15-minute time frame and see what price does now. We've got our main take profit at a 1 to 3. And what can we see on the left? We can see perfectly formed equal highs as a liquidity area right here. And we also have this old high right here. Now, if you do have your daily bias or your overall bias, which I would highly recommend, you could target further levels of liquidity. If price has a reason to move even higher past this area, you could mark out other liquidity areas, such as this overall high right here, this old high right here. As you can see, after that displacement, let's see how price reacts to that area right there. But if you want to just take profits at a set risk to reward, which I would recommend if you're working on your consistency and your patience to overall build your discipline, I would recommend a set risk to reward ratio of a 1 to 3. So as you can see, price instantly smashes our take profit and hunts for that next liquidity area and has an aggressive reaction instantly after sweeping that liquidity. Now, if you were to hold that trade to that overall liquidity area, that would have netted you around a 1 to 8 risk to reward ratio. And that just shows you the power of this strategy, just using 2 time frames, one as your higher time frame and one as your lower time frame for your confluence. So now let's get into the following London session after this, and let me show you the next setup. So again, as you can see, we're on GBP USD and we're on the 15-minute time frame. We're going to be using this as our high time frame and then the 1 minute as our lower time frame. So as you can see, the 15-minute has built up liquidity with this wick right here. We also have relatively equal highs, you could say, with these highs right here, but this is going to be our overall liquidity area. And you could mark out premium arrays such as these fair value gaps over here, but you don't have to. It's just a bonus if price does tap into these areas. So instantly price sweeps that liquidity, taps into our premium array. So from the higher time frame, the 15-minute, we go down to the 1 minute time frame. We're sticking to a rule-based system to look for a time-based model. And again, you can see we're still in our London session area, so we can take this trade if the fair value gap is valid. Now, as you can see, I would mark this out as my market structure shift because we do have liquidity sweep B, the second liquidity sweep on the lower time frame right here. And this is the low right before that second liquidity sweep right there. So this would be my market structure shift. And it's pretty obvious price has moved with displacement. Now, in addition to this, we also have this fair value gap right here. And this is our earliest fair value gap that's closest to price right now. There's not multiple fair value gaps right here. So this would be the only fair value gap available right now. So keep it very simple. Enter at the low of the fair value gap and then place your stop loss above the high. Remember, we're going to go up to the 15-minute again to look for confluences to take profit either here or even further. So let's see how price tags us in. As you can see, it made that move with displacement. Look at that market structure shift. It's obvious. It's telling you that smart money is involved in this move. So as you can see, price immediately tanks in our direction. Let's just go up to the 50-minute to see how this is playing out. Now, as you can see, yes, we do have a liquidity area, but price is overall moving down. So we could target other levels of liquidity, such as this imbalance area right here. So we do have this imbalance area almost perfectly in line with our 1 to 3 take profit system right there. And in addition to that, we also have this order block right here after this imbalance. Let's see if price reaches this area right here for overall around a 1 to 9 risk to reward ratio. If I just play this out, you can see we got our entry within our London session and our 1 to 3 risk to reward ratio was perfectly hit. So if you just consistently take profits at a set risk to reward ratio, you will find consistency, and I can almost guarantee that you will pass your funded challenge, because that's a major step that most traders miss. They fail to have set take profits. They always have mixed take profits, which is why they never find consistent results. Now let's see how price treats that overall liquidity area. And as you can see, price perfectly taps into that order block area for around a 1 to 9 risk to reward ratio. But remember, keep it simple and keep it consistent, because essentially consistency is where you find profitability. And I'm also going to be releasing private one-to-one mentorship very soon with a select number of students, and I guarantee that they will become full-time traders with my education, with my one-to-one mentorship full course. So stay tuned for that one-to-one mentorship that will be coming very, very soon. So that's it for this video, guys. This is by far the easiest ICT strategy that you could stick to. It's all on a plate for you guys. I've shown you which time frames to use. I've shown you the time frame confluence. I've shown you the confirmations that you look for when you're taking your entries. So guys, remember, keep it simple, keep it consistent, and I'll see you in the next one. Let me know in the comment section what videos you want to see next, and share this video with a friend who's struggling with ICT concepts. And that's all for today's video, guys. I hope you enjoyed. Stay tuned for the next one. Peace.